Dividend Reinvestment Plans by www.profitableinvestingtips.com. If you want to see your investment gains accumulate and exponentially grow over the years, consider dividend reinvestment plans. We recently talked about dividend stocks like utilities when we wrote about stock picks for 2014. Utilities commonly pay handsome dividends and commonly offer dividend reinvestment plans. The advantage of dividend reinvestment plans, also referred to as DRIPs, is that your dividends are automatically reinvested and you receive decimal fractions of stock so that every cent of dividends is reinvested. You do not receive a dividend check, but rather a statement that your dividends were reinvested. At the end of the year, dividend reinvestment plans send you the appropriate information for your tax returns as well. There is no temptation to spend the dividend check, and you will see steady and exponential growth of your investment even if you do not purchase new stock. And with DRIPs, there are commonly no fees such as you would pay if you used your dividend checks to purchase more stock. The utilities we mentioned in our 2014 Stock Picks article were Southern Company, SO, Duke Energy Corporation, DUK, Dominion Resource, D, American Electric, AEP, Coleco Corporation, CNL, Entergy Corporation, ETR, Next Era Energy Incorporated, NEE, NRG Energy Incorporated, NRG, Scana Corporation, SCG, Teco Energy Incorporated, TE, Excel Energy Incorporated, XEL. There are lots of dividend stocks and lots of dividend reinvestment plans. As part of your stock portfolio, consider holding conservative stocks that will continue to pay dividends in good and bad economies. Consider dividend reinvestment plans in order to profit from exponential growth of your investments. Screening for dividend stocks. A quick and handy tool for stock screen is the Yahoo Finance Stock Screener. You can use this tool to screen stocks by sector, price, dividends, and more. As a conservative example, we choose stocks with a market cap of $10 billion or more and a dividend yield of 3% or higher. We found Duke Energy Corporation, which is in our list of utilities. The company has a market cap of $50.44 billion and pays a 4.4% dividend. We Googled Duke Energy Dividend Reinvestment Plan and found out that their DRIP is you do not pay purchase fees or reinvestment fees and that purchases are made every month. The stock screen in which we found Duke Energy contains ConocoPhillips, Cisco Systems, Dow Chemical Company, Chevron Corporation, Dominion Resources. Note that Dominion is in our list of utilities. High dividends versus staying power. The companies listed in the screening section have been around for years and are not going away. This is the point of buying dividend stocks and using dividend reinvestment plans. There are higher paying dividend stocks, but sometimes the company is paying out huge dividends to disguise an intrinsic weakness in their company. If we apply the same requirement of a $10 billion market cap, but look for a dividend yield of over 10%, the screen gives us two stocks, Annaly Capital Management and Seadrill Limited. Annaly used to sell for $19 a share through most of the last decade and fell by half this last year. Think of it as a 5% dividend stock whose price fell by half and whose dividend may well be reduced as well. When we screen for Seadrill, we see an investment article that notes that Seadrill will only be able to sustain its dividend if the current weakness in the oil drilling market improves. For more insights and useful information regarding investments and investing, visit www.profitableinvestingtips.com.